Hi, everybody. Welcome to the Gold Call, Truly Rich Club members. Welcome, welcome, welcome. This is going to be an exciting time because we have with us our mentor. And, you know, I just have to just say this because we've got maybe some new members here of the Truly Rich Club. He is the chairman of the board of Rampver, the biggest distributor of mutual funds in the country. He also is a board member of 20 other companies, including Globe, including Ali. Please welcome the one and only, one of the best financial speakers in the country today, our dear friend, Rex Mendoza.
Hi, good morning, Brother Bo. Good morning, gold members of TRC. Happy holidays.
Yay! Rex, thank you so much. I'm excited for our conversation because the year has ended, and what a year! What a historic year! We've never had a year like this, and just wanna be, but before we dive into our conversation, Rex, how are you? How's family? How's life for you this past year?
Things have been good, Brother Bo. It's really, quite blessed, quite blessed. We're very grateful. And as I told you, again, it's always great to be somehow diversified when it comes to businesses, no? Background wise, all of the companies that I had that were like lording it over everyone with retail, with events, all of that stuff, movie tickets, concert tickets, they're doing very well then. Now there's Zelt. My financial services business, very competitive field, was struggling in the last 3 4 years. I mean, not really struggling in terms of business. They're doing very well, but in terms of hitting target. But for the first time in 5 years, you know how much in terms of targets I always push, right? So I go for the moon and the stars. But you see, we hit the moon and the stars this year. Surprisingly, we hit target, and my team's very happy about it.
Galing. Rex, so you're somebody who has just because some are new, some members are new. They say, what's he talking about? Rex is owner of, let's say, selling watches. He's also the owner of a company that sells or takes this, cares for the services of the distribution of tickets for events. So all of that, tsaka yung events place. All of that is
The blue leaf,
zero. Blue leaf, all of that is zero, and yet you have other businesses that went to the moon. That's amazing. Which we teach that, multiple income streams.
You'll never know. I mean, the guys from financial services were always complaining, oh, our margins are so thin. Oh, it's tough. It's too competitive. The retail guys are always partying. They have an events place. The retail is really up and all that. But again, this year, it's the other way around. These guys have been thankful. They're in the right business.
That's right. That's right. Rex, I know you prepared something to share with us, and we're excited to hear it. As the year is ending, we're looking at 2021, and what are the most important things we need to think about? Um,
Well, I'm looking at the perspective where I know Edmond has talked to our member Edward as well. So I'm
Yes.
sure everyone's so immersed with the information, with the outlook that's out there. So I'm going to pull back. I'd like to put a bit more humanity behind the trading. There would be a lot of things I will admit to you guys, and that's a jump off point from where I'm at today. So I'd like to share that to have a bit and a piece of this strategy that I have somehow developed all through the years.
Yes.
So if I can share my screen, Brother Bo,
Yeah. That's fine. We're trying to. Ian's gonna fix that.
okay, but how can I? Is this showing up? No.
Wala pa. Wala pa. We're just a minute. Just a minute. Sir, just click on the share screen at the bottom. Share screen at the bottom.
I'll cancel it first. Okay. Now I'm sharing the screen. Is that mine?
Not yet. It should show up on the bottom of my screen kasi.
How about now?
Still no go, sir. Are you sharing your entire desktop window?
I think I am. Would you want me to share an application window na lang?
Yeah, let's try that, please.
It's not coming in. It's not in the... Sorry for this. How do I put my PowerPoint slides on board? It's not showing up when I...
When you click on
share the entire screen. Let me just share the entire screen.
There. It's up. So just shift it first to your PowerPoint. But
okay. Then I'll just...
I'm still seeing your browser window, sir. I'm not seeing your PowerPoint. But it works when you click on share the entire screen.
Let me do it again. How about now?
I'm seeing you moving your cursor, and then when you click on PowerPoint, please. There, I can see your PowerPoint now.
Okay. That's it.
All right.
Are we okay?
All right.
So sorry for that, guys. That also tells you why we all need a person like Ian for all of these things. Thank you, Ian. Okay, so this all jumps off from a discussion I had with some Platinum members last Saturday. No, I shared why I actually have two portfolios, and instead of sharing you that idea of having two portfolios, I want to go back and give you an idea of where that whole thing came from. And why I actually advise a lot of people to do that. In fact, I did a video on this. And I said, are you gambling or are you investing? I asked that specific question because there are a lot of people who think they're investing, but they're tempted to gamble. And before they know it, gambling is part of the whole thing. Until it gets to be so exciting, you're now more gambling than investing. But you see, we have goals, we have financial objectives, and we're supposed to set up portfolios to match our retirement, our, like, let's say, children's education with something that's more comfortable, with something that's more predictable, with something that's really long-term and solid. Now, that's the temptation. But we're with people where sometimes the emotion gets into us. We'd like also to... I'm so sure share within cocktails, within Zoom meetings now, how good we've done in some of our trades. So there is a bit of emotion involved there. And that's, again, the human in all of us. So again, for me, awareness is very important in the field of investing. And that's why I'd want to be able to share this with you, to tell you that there's a background to it. Reaching investment goals will always be a balancing act between growth and risk. A balancing act between growth and risk. Unfortunately, a lot of people, when they're getting into so much of growth, they think it's going to be like that all the time. Many of us aren't so familiar with the bumpy ride. And again, this year has been quite a lesson, especially with the guys who haven't gone through it. I mean, Brother Bo, you and I have been investors since 2008, 1997. Me as way back as 1984, 85. So I've seen this happen many times.
2007 lang.
Exactly. Now, sasabihin ng iba, unprecedented. Hindi na unprecedented yan. It's just a new storyline. But in terms of, the real impact or the outcome, it's much the same. I've seen this movie played through again and again. So, siguro nakakalamang kami ni Edward na medyo may edad na kami, although siya mas lamang sa akin dahil malaki talaga namin na difference, hindi ba? So, kami, alam na namin yan. But you see, people don't know how to manage this balancing act, and that's a difficulty that many of us will face. Now, importante nga maganda, nasunog na agad yung iba eh. You know, when they get burned,
Yes.
they get the
Yes.
lesson. When people
That's right.
are flying so high, you know, it's much like the story of Icarus, di ba? So you're gonna be hit by the sun until
Tama.
you know, it's going to be fatal. We don't want that to happen. So again, I go back to the very basic question of all. Why do we invest? Do we invest to make more money or do we invest to achieve financial goals? You know, just this question, guys, will certainly be an epiphany for many of you.
Oo.
I mean, let's face it. Do you invest to make money or do you invest to achieve a financial goal? Because if we just
Yes.
want to earn more money, we are going to be losing our stride. We're going to be going astray. So let
Wow.
us make sure that when we invest, there is always an objective attached to it. But
Yes.
let me tell you, there are times when you know that person in you wants to get out, wants to say, I'm good at this, wants to outdo somebody else, or even outdo the market, outdo the index. All of these things are, you know, emotions that we have in all of us. So do we temper that or do we succumb to it? Now, the reason why I want that to really be taken to the fore is because asset allocation is an answer to that. See, it's a strategy. It, you know, basically puts a person to be responsible enough to put his money in different particular investment vehicles to match a future need. Now,
Yes.
again, sasabihin natin, bakit may time deposit dyan? Di ba? No, for your emergency funds, that's a must. You know, you
Yes.
still have to have
Yes.
a time deposit. You still have to have an ATM account for your convenience, right?
That's
Now,
right.
if you have big money, we can now refine that because 5% or 10% of such a big base will probably be, you know, a sin as well just to keep in a time deposit. So I think, Brother Bo, our strategy is to put part of that in commercial paper, part of that is to put it in money market funds, and somehow I put a little bit of A-REIT into this. Diba? A-REIT,
That's right.
na hindi ko tinitingnan. I'm not looking at the price, huh? I'm just looking at the investment yield. I'm just
Galing.
looking at the dividend yield. The fluctuations of the price, I look the other way. Because for me, that's not
Wow.
as when I put it here. When I put it
Wow.
as part of an instrument that matches my emergency fund, I
Yes.
treat it as a fixed income instrument because I know that it's going to yield 7.5% for me. Now, when the prices move up, that 7.5 will go to 6. When the prices move up, when the prices move down, like when we saw it at 24.10, that yield
Yeah.
will be going at around 8.5 to 9. Now, since I'm going to be getting the stream as a fixed income stream because it's a dividend that's fixed,
Yeah. Yeah.
I don't need to look at the share price because
That's
it's giving me another purpose. Once you put it in your stock portfolio, then it becomes very different. You're going to be looking at the capital appreciation with the dividend
Oo
yield.
nga.
That's a totally
Oo nga.
different analysis altogether. So,
Ayun.
what defines an instrument? It's not the instrument per se, but it's how you use it. Let me repeat
Oo.
that. Huh? What defines an instrument is not basically its basic nature and definition. It's how you use it. So, how you use it is something that's going to be very unique to you. So you put, you know, other monies in stocks, bonds, managed funds to build a portfolio that balances risk and reward that matches your risk horizon, your risk tolerance, your horizon, your
Yeah.
goals and objectives. Now,
Yeah.
what are the benefits of asset allocation? Diversification. See, a lot of people think diversification is a strategy. No, diversification
No.
is a benefit of asset allocation. Kasi pag nag-asset allocate ka, diversified ka, for sure.
Yes. Yes.
But asset allocation is a more methodical way of doing this because diversification basically is putting your money in 3 different things. So, okay, sige, diversified na tayo. Nasa nakalagay ang pera? Dito, Merrimart. O, di ba diversified ka? I mean, so, that's not the way to diversify. The way to really do it is asset allocate and then diversify. Now, if part of that can be gambling money for you, then that's the money
Yeah.
you can put in there. But you have to know
Yeah.
how much that is based on your
Oo.
total price. You have to
Tama.
be able to analyze it that way. Now, a bit of technical here because I still will have to make all of our gold members see that it is a methodical discussion. Okay? So, what am I saying here? As you move to different financial instruments, yes, your yield will be higher, but your risk will be higher as well. So, what is
Yes.
it's called the efficient frontier. Which means if you're taking more risk for a particular return that's lower, then you're not within the efficient frontier. You have to find out what that efficient frontier is, all of you, so that you don't take excessive risks for an amount that's not going to pay off handsomely.
Yes.
So that's why
Yes.
it's very important when you look at like the Sam table or Edwards predictions. See, there is a target price. So you exactly know what your upside is going to be. So if you're going to be looking at a name like SM or Ali, if that upside is high and you know, because this name is a good brand, it's a great company, it's going to be there for generations, then that's not so much of a good risk. Then you're going to be improving your efficient frontier. Now, if somebody else told you na outside the sum table, you know, many of our gold members, whether you admit it or not, you're going to be guilty of it. You invest in other things that are not in that sum table because somebody in a chat room somewhere made a lot of money in this particular stock. So you invest in it. But you see, the brand and the reward proposition might not be the same as SM or Ali.
That's right.
So you're not within the efficient frontier. That's the reason why I want you to know that if ever you're going to be making bets on that, they have to be very calculated bets.
Yes.
But again, we get astray. Sometimes they give us so many of these big numbers, before you know it, you're part of the guys who would have like 10% allocation on good stocks and 90% allocation on, you know, the casino-based stocks. I'm not talking Bloomberg. I'm talking like playing the stock market like it's a casino. And then there are times when that happens. Now, again, Edward will be very, very frank about this. That's also related to age. Okay? So, the impacts, yan yung mga, like, lalo na si Larry Gamboa, di ba? They're going to be looking at, you know, dialing down. See, there is a growth percentage. I'm not saying that growth percentage will be absolutely zero, but it will be lower compared when you're in your 20s and 30s. When you're in your 30s and 40s. So, again, it's also the time horizon. So, it's not the instrument per se, it's also the time horizon. And you have to put yourself in that situation. Okay, so how will I now, you know, put everything together based on my goals, based on my time horizon, based on my risk position, risk appetite. Now, many people don't know this, and Edward keeps pounding on this every time. 90% of people who trade lose money. 90% people who trade lose money. It's very exciting. We love it, but they lose money. So the key to this is to get into like the sum table, get to what you are teaching, Brother Bo. But you see, you know, the downside of that is that it's not too exciting. That is the downside of what you're doing. You see, millennials today want the excitement. They want Bitcoin, you know, from $8,000 to $24,000. Well, people like that, right? But if I ask you, will you put your education, put your child's education, your child like just celebrated his first birthday and you know you're bringing him to the best college in the Philippines, will you put that in a stock like, you know, those penny stocks that might not be there? As we all know, like the S&P 500, look at Dow Jones. How many of those companies are in that 30 company list 50 years ago? Only one remains, IBM. Only IBM remains. All the 29 are new companies. So see, we have to make sure that people know this. Asset allocation, 65 in some studies, up to a high of 91%. Much of your performance will be based on asset allocation. Look at this. Security selection, 5%. Market timing, 2%. Other factors, 2%. So yung kaka-timing mo, the way you look at it, when you binabantayan natin and all that, you know, that actually gives you 2% pala eh. That gives you a 5%. See, when you're earning that money, it gives you an idea that it accounts for a greater part of your reward system. But the truth is, over time, it's not. Over time, it's really not. Now, I can tell you, maybe for a year, it can be yes. But I will have to take any individual who have said that it will be the same after 15 to 20 years. In
Yes.
15 to 20 years, you will have to have a baseline portfolio that grows with you over time. Grows
That's
with you
right.
over time. See? And that's the reason why a lot of people would probably say, okay, when the market dropped last March, I lost a lot of money. Because I can never be zero. Even if you sell, I'm going to be a liar when I said, oh, I read it and I sold all of it. You never do that. Because you know that if it's going to be there and your investments are sound anyway, then
Oh,
after March will come a September, an October, a December, and things are almost like where we were, right?
yeah. Yeah.
So there would be opportunistic moves and there would be strategic moves. There are two different things.
Oh,
Strategy and opportunistic moves are totally different. So diversification, you lower the overall risk. Okay, asset portfolios act very differently. So again, brother Bo, that's the reason why you're in real estate. That's the reason
yeah.
why you can be in, even some of us are also in art already. So things
Yes.
like those, because these portfolios move differently, then it balances off when things are happening. Like I can share with the guys, like what am I talking about? Even in my businesses, I have Mango, I have Techno Marine, I have Daniel Wellington, I have Blue Leaf, I have MGI that issues all the tickets for SM cinemas, almost all the cinemas in the Philippines, plus concerts, right? Even the arena and all of that stuff. Can you imagine how much all of those are earning right now? Zilch. I mean, they're not earning money; they're losing money, right?
Yes.
But I have other investments on the other side that's like Rampver, my portfolio in the exchange. I mean, there are things that are like even agri that are part of the essentials that are booming. So,
Yes.
because I'm diversified, I can be happy and I can be, probably disappointed in some lines of business, but
Yes.
I'm not wiped out. There are people here who get wiped out in development such as this because they don't have the asset allocation. Again, it's the
Ayun.
contrary of putting all of your eggs in one basket. But again, this is the reason why, Brother Bo, sometimes what we teach is not so popular with many. You know why?
Oh,
Because it gives you downside protection, pero your upside can also be limited. Diba? When the market's flying, we're not as exciting to many. We're not like the 5 baggers, the 10 baggers. We're
yes.
not going to be like that, but we're going to be responsible enough to make it grow and move forward. Again, the discipline. You see, when you lose money, you have this natural tendency to question the strategy that you implemented. You
Mm.
question it. That's why you always change. Ay, nalulugi ito eh. Or 1 or 2 years pa lang, you're gonna change your direction already. See, you're lacking the discipline. When you do asset
Tama.
allocation, the patience is already built in. The patience
Ah,
is built in. I don't have to touch it. Now, if you want to touch anything, why don't you create another portfolio that you can do what you want to do? And most of this will be the crazy stuff anyway. so,
yes.
so,
Yes.
for most of your real financial objectives, real long term goals, they're going to be in a strategy. Whether it's working or not, you're going to have the faith that it's going to be working sometime soon, maybe in another
Yes.
5, in another 3 years. It will happen.
Yes.
Be
Yes.
patient with that. But then, the guys that would like to tinker, the guys that would like to play around, then get another portfolio for that. You minimize the impact of emotions when you do this. So, this is the cycle of emotions that Edward shows you, but
Yes.
we lived through that, and that's a given
Yeah.
for you. So what am I telling you guys? Total net worth will have to be divvied up in all of these things. Again,
Ayun.
balancing up between growth and risk, tax treatment, access and liquidity, and distribution. So I will have my fixed income instruments, I will have my money market, I will have my bond funds. Okay? Just a plug, the best performing bond fund last year for the entire country, whether
Uh-huh.
it's YTF, whether it's mutual funds, is called the Soldivo Bond Fund. Okay? Number one in the entire country. Net rate of return. Hold on to your seat. 7.5 net of tax. How
Grabe.
much are you getting for your time deposit?
Yes.
Huh? So, yun eh. Di ba? If we now know all of these options, then our fixed income can also be allocated. But
That's
then
right.
there's that growth part, which we put in businesses, equity investment, or equity lays funds. Then we put some in hard assets like real estate, other stores of value assets, and then at the tail end of it is also protection. The most basic, the very foundation is protection. So optimize personal net worth. But again, guys, eto na. I will have to admit to you, and maybe you all have to admit to yourself, that there is a lot of paradoxes and ironies deep within you. Now, let me tell you, this will unleash the power that's there. Self-awareness is very important in achieving financial security. Most of it, what we study with Calum, with Edward, with the trading, fundamental analysis in finance, all of that are thrown off the window because of emotions. We all know that. And that's why many people will say easier said than done. So what did I do? I created another dimension. Okay? Another dimension where here, I'm going to be a saint. I'm going to be following what needs to be done. But on this other side is another dimension where I can sin, where I can bet in instruments that, I'm not saying wayward, right? I still do analysis. But at the very least, I'm not going to be, let's say, hedging or putting at risk the future of the financial goals that are important to me and my family. So, going back to these personal paradoxes, I am responsible. I am objective. You see, I became the CEO of an insurance company. I became responsible for what? Investing over hundreds of billions for many different people. Obviously, I know how it is to be objective and responsible.
Yes.
Yet, I am comfortable with high levels of risk and uncertainty. You see, I have to admit, there's always a gambler in all of us. There is always a gambler in all of us. For me, that's an itch. Okay, that's an itch. Di ba? Now, honestly, iiwasan mo ba talaga yung itch, or is it going to nag you all the time? Will you give up? Will you give in to it? Now, that's the problem. When you throw your responsibility and objectivity for this itch, you're gonna go astray. However, if you part and make sure you have a thick dividing wall between the two, why not? Then you can actually play both games, right? I am committed to plans. I'm committed to plans. I have financial plans. I have timelines, deadlines. Yet, I have this competitive zest to outperform. That I am very competitive. Pag may nagyayabang na, okay, ganito yung yield. I want to be better than them, right? I know I have to be better than that. So, I seek alpha all the time. I seek alpha. I want to be able to seek a growth rate. That 10-bagger, you also look at that. So, since that's within you, again, question, are you going to give in? Or are you going to stay, really so focused on this?
Yes.
I am methodical, as I mentioned. I'm also systematic. But hey, I am stubborn with a lot of emotional and personal quirks. In my trading, in my, and maybe that's my personality. Let me give you an example. Okay.
Yeah.
There's a stock. Okay. I know it's going to go down. I know it's going to go down. Okay. So I sell it. And I know deep within me, I'm going to buy it back. Okay.
Yeah.
Deep within me, I'm going to buy it back. Certain things happen. It continues rising. And if I'm going to be objective, if I'm going to study, if I'm going to use research, what it tells me is that I have to buy back. I have to buy back. Even if I'm losing because I sold it and I'm buying it back at a higher price, I have to buy back because the picture has changed. Okay?
Yeah.
Oh, let me be honest with you, Brother Bo. I somehow struggle with buying back.
Yes.
I struggle with buying back. Ano na yan eh? Parang, sorry for doing this analogy, pero parang babae yan eh. Dinampa ko eh. Tapos iniwan ako. Hahabulin ko. I'm just being honest here. That's what happens, right? So, I sometimes get to be stubborn. I look the other way. I look at other stocks. This stock. Okay. No, that's the point. When you're objective, then the decision has to be different. But when you're in your personal quirks, you're in your emotional bind, guys, let's face it, right? There are times naman when you bought something and it's not going up and there's another stock in there where you're supposed to move it. It's also hard to leave, right? It's almost like you made an investment in something. you'd want it to bear fruit. And this is the big question in our heads all the time. Kahit break-even man lang bago ko tanggalin. And that break-even never happens. You see, it becomes redder and redder and redder. So, you see, so how do you deal with that? So, again,
Relate
guys,
much.
if you are honest with yourself, as I've been, 30 years ago, alam ko na to eh. I'm gonna be doing this. I'm gonna be sick of this itch. And I guess it's also a background, Brother Bono. Let me admit to you, when I was a lot younger, I lived in Sampaloc eh. I mean, I've shared that in my books, right? I live in Sampaloc, and the games we play are not the games that people in Makati, the kids in Makati play. You know, we play. I don't know if you're familiar. You're also from Cubao, and then you're
Yes,
you
yes.
so you would know. We play text. If you know, remember the text.
That's right.
And the rubber bands. Okay.
Yes.
Rubber band, okay? Kalog with the caps of, bottle caps that you shake, and isn't that gambling? That is gambling. So when I was still a small kid, even my games are gambling in effect.
Yes. Yes.
It's with me as I grew up. That will always be with me. You see, when I was young, I dominated my whole community's Texas and rubber bands. And my mom, di ba? My mom will like take me home by the ear, huh?
Yes.
Slap me at my butt, get all my rubber bands, and guess what she's gonna do? She's gonna
What?
sell them at our store. We had a store. We had a sari-sari store. So yung panalo ko sa goma, sa text, ibebenta niya uli. So my friends buy them from the store, and I win it back from them, right? And my mom
yes.
gets all that money. So
Yeah.
again, so that's just a backgrounder. So again, what's the remedy? What has been my remedy? My remedy or strategy, if you want to really be, if you put it in a paper, it's nice to hear strategy, right? But for me, it's a remedy. May sakit ako dun sa taking that risk, right? That itch, I say it. So I get a core portfolio. It matches with my financial goals and objectives.
There
and
you go.
A trading portfolio which matches the quest to seek alpha and outperform.
Yes. Okay.
You see,
Got
with
it.
my core portfolio, Brother Bo, I don't need to earn anything over 10, 12, or even 15%. Even sometimes 8% is okay. Because
yeah.
I am methodology. Sorry.
Yeah.
I am consistently raising that value up with my contributions, right?
That's
with
right.
my, savings, with my, constant portfolioing. So, you don't need a high rate of return. But this other side, you need to. So if I'm going to be sharing names, right?
Yeah. Yeah.
These are going to be the names in those portfolios.
Tama.
Now, let me be very clear with this. These are not cast in stone, right?
No.
For the core portfolio, it can be. The key to the core portfolio is allocation. What stock gets more, what stock gets less. And if I'm going to be very honest with it, I don't even sell it unless a story changes. Unless a major storyline changes, rarely will I sell from my core portfolio. It's almost always an add than sell. Maybe I will be adding 90% of the time. If I'm selling, maybe 10% of the time. Now, there is a process that I go through that's very important with my core portfolio when I'm about to sell something. If I sell anything, the question is this. You will sell something. Where will you put that money?
That's right.
Totally different. Because if you don't have another option that's better, then you're not supposed to move it. The only way you move it is when you're going to be moving it to a better option.
Yes.
And normally, it's going to be within the allocation of that portfolio itself. However, on this other side can be, the smaller stocks, the winners, the alphas. Okay? Now, am I saying that these stocks won't make it to my core? No, they do. Part of these stocks right now are part of my core, but not in the same proportion as these big names that are already in my core from years ago, right? But in my trading portfolio, they can probably be a big chunk at a time because it's opportunistic, right? Trading portfolio, like let's say an ACE-N or an all-HC can be a big part of the trading portfolio, but I can whittle it down where I can increase it. But the ACE-N and the all-HC that's part of the core portfolio, normally I don't sell it. So there are two different strategies. Even the small IPOs go to that small trading portfolio. So again, just a rewind. You're doing wealth management because you ultimately want a fulfilled life and a sustainable legacy. But can you, just withdraw from that fulfilled life objective, that sustainable objective, because you're just wanting to correct an itch that's happening to you. So it's very important that we all understand, maybe our members are in the accumulation stage, and in the accumulation stage, the word called growth is huge.
Yes.
But later on, you're going to be dialing it down to preserve and transfer. You also have to know when to do that. Okay?
Yes.
So I tell people, do this, do an inventory. So people will also get to surprise themselves. Maybe all of your money are in stocks, all of your monies are in financial instruments. Maybe you should also try and then balance things off if you can, right?
Yeah.
So again, this is a rule of thumb, but I share this with a lot of people. So depending on that whole base, it can be 5 to 10% savings. Time deposit CDs, 25 to 30% stocks, bonds, mutual funds, UITFs, 25 to 30 businesses, 20 to 25 real estate, 5 to 10% insurance, and 5 to 10% others. So it depends on how big that is. It depends on that person's situation. If you don't have a business, then you have to allocate the 25 to 30% for stocks, bonds, and real estate as well, right? So again, going back to goals-based asset allocation, you emphasize investing with the objective of attaining life goals. Optimizing returns and outperforming the market are not priorities here. For your core portfolio, don't mix it up. See, optimizing returns can be good for a trading portfolio. Okay? And then it reduces your negative behavioral biases. Now, I would have to say, Brother Bo, I'm going to invite the gold members out there, just look at our YouTube channel. Just go to Ramper Financials, look at this video called Are You Investing or Are You Gambling?
Yes.
I mean, that's an extensive discussion of what we have talked about today. And on top of it are other topics within that YouTube channel. I guess I interview Bobby D. I interview a lot of other people. In fact, up and coming for the holidays, I'm going to be interviewing Tony Aquino, who's the legendary business leader who's not like in the limelight. So a lot of people don't know him. So essentially, I want people to see, all of these insights, all of these tips, no? If you can subscribe and then, just get into that QR code so that you can see us, you can listen and watch some of those videos. So again, Brother Bo, I keep my presentation short. If people want to ask questions, I guess that's what we have to go through to get us more into the detail of what people are interested in. But I guess that's what I wanted to share in this session, and maybe I'm open to questions moving forward.
This is from, thank you so much, Rex. This is from Jamie. Merry Christmas, Brother Bo and Sir Rex. Aside from the stocks that are there, I'm sorry, aside from stocks, are there other investment tools that you recommend for a family man in my late 30s?
Other investment tools. I mean, I just said it. I mean, there are, again, you have to allocate portions of your monies into like growth, again, emergency funds, and your stability, things like this happen, right? So here, you'll probably get into instruments like, I don't know if you're familiar with money market funds, with money market or commercial placement, so that at least you can increase the microscopic interest rates that the banks are giving you. On the growth side, again, between stocks, bonds, mutual funds, you can also look at instruments like, we say the millennials are looking at Bitcoin, but be careful with it. Again, don't invest in anything you don't understand, in anything you don't know. But at your age, I also try to make sure that there's a bit of discipline by investing in hard assets. If you can invest in a condo, an apartment that can give you a rate of return that's stable, inflation hedge because it's a hard asset. Now, if you don't have enough money to buy property, then get into a REIT, get into a real estate investment trust. So it's almost like owning a mutual fund. A mutual fund of a stock is a REIT of real estate. So it's almost the same thing. So unless you can graduate into a property of your own, then you can probably look at buying a piece of it only.
Alisa Presno, is it okay to sell or redeem the fund from XPIEF? That's the Phil Equity mutual fund, equity fund, and then buy our specific recommended stocks instead?
Again, for me, those are two different baskets. Okay, you go into direct stocks because you'd want to be able to manage things on your own. Select from all the advice that Brother Bo, we are giving you, you maneuver. Now, Phil Equity is a fund that's managed by a fund manager. What you put in there, you can probably forget because there's a fund manager that takes care of it. So those are two different baskets altogether. Now, if you take this out and put it here, maybe you can earn a little bit more. But maybe it can go the other way around. So I advise people to have both. And compare yourself first. Again, I'd want to see your track record first. I'd want, again, this is something I admitted to the mastermind, while I think I'm good at what I do, I'm good at my trading, di ba? There is still difficulty when you have a very, very big portfolio. There's such a difficulty when you have a big portfolio. That becomes, again, this is a problem that many people don't understand. You see, poor people have problems, rich people have problems too, right? And that's a very different problem. See, when you have 10 million, easy to move on your own. You can buy and sell, right? Now, let me tell you, if your portfolio is 1 billion, you think you can do it, directly managing it yourself? If you have other businesses, if you have other things to do. So what will you do? Part of it, you let other managers take care of it. I mean, you're going to pay fees, but fine. But you'll be leaving for your own managing something that's comfortable for you. So do both. And compare how you're doing. Ako nga, what I did, brother, I compared. Sometimes pala, I don't even beat the fund managers. So what the heck? I mean, let me do what I do and what I want to do and let them do the stuff that they need to do.
Yes. From Glo. 10 years ago, I got VUL from Film Life. I noticed it only increased a little based from the total paid in 10 years. This is prior to lockdown. Here's her question. Should I withdraw na lang or hold pa din? Maybe she's thinking withdraw it and put it in the stock market. Maybe that's what she's thinking.
There's a possibility for you to do this halfway, right? It's a VUL. I don't know what plan you bought, but almost all VULs are partly investment and partly protection. It's always a combination. Now, if you want to do the investing yourself, if you're not happy with the way the investments have gone, then you probably can do the minimum for the investment side, withdraw what you can invest on your own. If you feel more comfortable and more confident that you're going to do better, withdraw that because your 10 years, you probably won't have a penalty for doing that anymore. So your insurance product can be a VUL, but it's going to be largely protection. You dial down the investment, and then you're now practically saying, I'm investing on my own. So you maintain the protection, but you will be investing on the side, which means you can defeat or you can be better than what the insurance company is doing on that portfolio prior to that particular decision.
Galing. Francis is asking, if we are going to buy a REIT, what percentage should it be for in our portfolio?
Again, as I've said, I'm not going to be putting it part and parcel of my stock portfolio. I'm going to be looking at it as a part and parcel of my fixed income portfolio, which is, let's say, 5 to 10% of my entire holding. So 5 to 10% is my emergency fund. But because my holding is already big, that 5 to 10% is criminal if I'm going to be, leaving it with a bank. So what I do, what's with the bank? It's an ATM. That's probably like 1 month expenses for us. That's in the ATM. And a time deposit, which would probably be about 3 to 4 months of expenses for us.
Galing, galing.
Withdrawable. Anything on top of that can now be a REIT, can now be commercial paper. It can be a participation in a San Miguel, Ayala Corp, or Globe Bond. So all of these things now, if you put them all together, they're going to be earning a lot more. So even my emergency fund is working for me. Now, as I've said, I'll put a REIT there because for me, a REIT is not a stock. A REIT is a fixed income instrument. It has a very predictable dividend yield, which right now is going to be about 7 to 7.5 projected for 2021. So that's something that's going to be working for me. I'm not looking at the price anymore. I'm not monitoring that price because I'm monitoring that dividend yield.
Galing. See, Philip is asking, in the two portfolio strategy, do you recommend separate or consolidated?
I consolidate it eventually to get my overall performance, but it's totally separate all the time.
Dapat hiwalay. Oo.
Hiwalay talaga siya. You cannot say, in your mind it's this, but it's in the same basket.
Yeah.
Before you know it, you're going to be making mistakes in allocation.
Yes. Oo nga.
Diba? Alam nyo, yung pwedeng pansugal, yung pwedeng pang future goals and needs, totally separate. Totally separate. Now, let me tell you, this is what happens. You do very well on your trading account. It goes bigger. Like remember, I told the platinum members, the most for me is 80-20. The most is 80-20. Once that trading portfolio goes beyond 20%, let's say it goes 25%, I have to liquidate 5% and transfer it to core.
Ayun.
I do that.
Galing.
You know why? Because I have to keep my gambling money to a manageable sum.
Tama.
See, this is a psychological thing that not a lot of people understand, di ba? Sometimes we go braver, we become overconfident because we feel it's not our money anymore. I earned eh. That was a peso. It's now 7 pesos. So, 6 na piso dyan. Kita lang. So, I can play with that. Wrong. That 6 pesos is already your money.
Yes.
Your money. So, why not keep part of that money here because of your long-term, goals and objectives, and keep your play money, really stable at the core. See, this is what happens, no? Again, in that video, I compared it, diba? I always say this. You know what? If I'm going to be computing it, my trading portfolio now is totally profits. It's totally profit. I've already gotten, part of my capital brought back to my core. So I can probably lose this anytime. Okay? So why am I so brave with this? Dugo na ng kalaban, di ba? But always take this particular note. If you just liquidate this, di ba it's your money already?
Yes.
So don't think it's not your money. Even if you say, dugo na ng kalaban yan, you still have to be very responsible because if you liquidate all of this, that's still your money.
That's right.
And you know what I compare, Brother Bo? Look at the guys in the casino. When they sit down, it's their money. It's a capital putting it down. So they bet very little. They bet very methodically. Okay? Now, they win. The winnings, the chips pile up. Then they go wayward in investing. Malalaki na.
Yeah.
Why? Because in their mind, it's not their money.
Yeah.
Can you just do this? Put part of the chips in your pocket so that you cannot take them out. O di ba pera mo yun?
Yes.
Step 1, if it's your pocket and you're not playing with it, isn't that your money? Now, this is the bigger thing. Why don't you try standing up? If you stand up, that's all your money now. The house cannot take it back.
Yeah.
Again, this is my if there is anything I can share with this gold session, Brother Bo, it's that it's an understanding of our quirks. It's an understanding of our So if you're playing up to that itch, then strategize as well. Manage that emotion. That's very important. Yeah, sabi ko nga, we still have to, be responsible even if it's like winnings, even if it's pure profit. It's still your money.
Tama. Tama. Wonderful. I think we answered already Portia's question. How much is tolerable portion for each portfolio and versus the core portfolio? So mga 80-20 daw, Portia, would be okay. Amelia Concepcion, Brother Bo, do I still buy Globe? Absolutely. Tel, I'll let Rex share his thoughts. Globe and Tel.
Let me tell you guys. Let's be very very honest about this. I don't think things will really change before the third and fourth quarter of next year. Can you just imagine, even if that vaccine is out by January, before it reaches our shores, probably the earliest would be mid-year, and before we get to administer that, that's going to be 2022. So 2021 is still all about essentials. It's going to still be all about essentials. So the telcos will still be doing very well. The pure golds of the world will also still be doing well. RHI, all of those essential stocks are still going to be doing well. So I'd be solidly behind those. Plus, again, you're getting dividends. So you can never go wrong with these things.
Galing. Eric Estrada, Sir Rex, what is your take on Forex and US stocks?
Funny, because just this morning, somebody asked me, a very good friend, whose son is getting involved in Forex. I said, that's going to be very, very exciting. Millennials would probably be more engrossed with that. But you see, I have a background in Forex. Not me personally, but a lot of friends in the 80s and 90s who became problematic with it. Again, what I don't like about Forex is that it can wipe you out. And any investment can wipe me out, I don't get, involved with, right? So it's too volatile. It's something that's not essentially fundamentally driven. It's technically driven. So it puts a lot of discomfort in me. So am I involved in Forex? The answer is yes. The answer is yes. But only in a way of hedging my portfolios also. So when I buy dollars, I buy euros. I buy them because I use them.
Yeah.
Is it balancing my portfolio so that I can have X amount of it in euros and in dollars? The answer is yes. I have international portfolios as well. So that's the only time I get involved in Forex. But in terms of trading Forex, I never do it. I never do it. So I'd be careful with that.
Wonderful. James Del Castillo. Hi, Brother Bo, Sir Rex. Can we not consider ACEN in our SAM table, given its good fundamentals and being under the good management of the Ayalas? Any insight on its upcoming SRO? Thank you.
Maybe, Brother Bo, you can share with them your plans. Huh?
Yes. For Platinum members, we're gonna create the Rex Mendoza portfolio. And he's going to be recommending some stocks that may not fit the criteria of the SAM. Although we also love ACEN, and we think it will be definitely a candidate to our SAM table one day. But there are certain stocks that will be recommended by Rex to our Platinum members that may not fulfill the SAM table criteria.
Brother Boy's calling it the Rex's portfolio, but I'm sure I'm going to be sharing that with other masterminds. I'm sure Edward will also be coming up with certain names for that, certain stocks that can be in that portfolio. Going straight to your question, ACEN will be doing well. I guess this whole world is going to be about renewables, and we're seeing that move today. Even the banks are starting to do that. Banks globally are stopping the financing of dirty energy. So you're going to be looking at money getting poured into renewables, and ACEN will be a beneficiary of that. So again, is it going to be a good stock to recommend? The answer is yes. The rights offering, I'm telling a lot of friends, you're going to be a fool not to participate. See, if you don't participate, sell it. That's very important. If you're not participating, sell it. Because it's trading at 7, and the SRO price is about 2. So if you don't participate, you're gonna be diluted.
Yeah.
You get my point? So you sell it and you buy it once the price corrects. But based on experience, the price corrections of good stocks never go into parity.
Yeah.
So mapapamahal ka. I'd rather subscribe to the SRO.
Very good. See, Jake is asking, can you recommend Dito?
Okay, it's for me a real gambling play, purely technical. I'm not gonna recommend it because I don't know what's happening in terms of the financials. So I am a spectator. I watch it. I marvel at the movements. I follow Marvin Hermo as well, so he has put a lot of information about that. But in terms of putting my own money, I don't. I'd rather stick to a Globe or a PLDT.
Very good. Jasper Gabriel, Merry Christmas. What timing? Brother Rex's Firing on All Cylinders book that I ordered arrived just now. Happy reading, Jasper. And to all those who want to grab Rex Mendoza's book, please, I totally recommend 2 of his books. They are amazing. Jean Remolino, good morning, sir. Thoughts about Pure Gold? I think Rex already answered that. It's an absolute yes. Because the essentials will still be growing in 2021. Edward Bartolome, good day, Brother Bo, Sir Rex. To clarify on earlier statements regarding ARIT, my ARIT is part of my portfolio in COL. Are you recommending to put up a new profile for this type of assets?
No, but not exactly what we're doing. No, whatever is there in call is there in call. But when you do that portfolio, when you study it within your own, let's say, Excel file, that's when you do this. What do you call this? This structure. You have to do a structure because again, when it's in call, it's all together, right? You don't even know what's high risk, what's medium risk, and what's fixed income. As I've said, for me, a REIT is going to be fixed income. So when you do that portfolioing as you analyze your own assets, that's the time you structure it. In call, they won't structure that for you. As far as they're concerned, this is what you own. These are all the issues you bought. This is your portfolio. Now, when I look at my call account, part of that is in my trading portfolio. Part of that is in my core portfolio. So even the guys in call sometimes know the crazy things I do with my portfolio because they get to see, if they're looking at it, they get to see my sells and buys, but they don't know which is which. Because I only know what's core and what's trading in my own setup, in my own structuring.
There you go. Wonderful. See, Rosemary Catalbas is asking, if real estate asset is used to generate income, will the allocation be under business or under real estate? Merry Christmas.
That's a very good question. If it's not going to be a main line for you, then it's going to be simply real estate. But if you become like the Centro Mavens, if you become like Randy Manaloto, you can start with like 3, 4, or 5. You cannot consider it a real estate portfolio. Then it's now a business. When it now becomes a business, it's when you hire a team who cleans it up, who fixes it up. So what you're getting from it is not passive. Again, that's the determinant for me. If it's passive income, it's still real estate investment. But if it's not passive income, if you've created a team, if you've created a support system for it, then it becomes a business.
Yes. We have a few more questions. The questions keep coming up. I hope you're okay, Rex. Joshua, when do you sell mutual funds? Maybe for the intention of buying back at a lower price.
I don't eh. That's something I tell our clients, don't do that. With
Yeah.
stocks, yes, but with
Yes.
funds, you don't, because the fund manager is supposed to do that for you. You're
Oo.
actually negating the effort of the fund manager. If the fund manager
Oo.
reads that certain stocks are gonna go down, he should be selling it, not you.
Oo
If
nga.
you sell it and buy it back, you're managing the fund manager.
Oo nga.
Have to be managed by them. You've entrusted it to them. You're paying them fees.